Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market update, and this is for Wednesday, and this is the 24th of January 2016. The problem is I'm really late, and we're just getting on towards 6 o'clock p.m. Central Standard Time. Let me explain why I'm late. I already said it in my gold video. We are working really hard on this webinar to get everything up and running, to invite you all into what we call our chat rooms where you can ask questions and so on. I've tried different pieces of the software. I had a different version a year ago. It got very expensive, and I want to be able to afford what I'm doing. I mean, we get a lot of people in and got to be able to make it pay without charging through the nose for any of these things. So we liked one, we got rid of it today. Too difficult to really set up. This thing's got to work where you click it and you're into the meeting. That's how I look at it. Yeah, we're going to want to know who you are and things like that, but that's the idea behind it. Now, let's talk about markets. I have a philosophy that I don't believe in going through major reports if you don't have to with positions. What's a major report? Well, if you're a eurocurrency player, it's certainly the European Central Bank meeting tomorrow morning and the press conference. What else? Davos in Switzerland, where all the heads of state, not all, but a number of them are there. And of course, we've got a big contingency of our cabinet members there right now. They're talking. And today, Steve Mnuchin let out of the bag whether it was intentional, not intentional, what he thinks. Maybe not what he meant to say, or maybe he meant to say it all. But his statement was, you know, a low dollar helps American business. And as a businessman, he gets it. That is true. Is it the best policy a Treasury Secretary could say? Absolutely not. You can think it. You're not supposed to say it. Academics will tell you that. The problem is, and I don't say it's a negative problem, the problem is these are not career politicians. These are very successful businessmen that the president's brought into his cabinet, and they will say things that can roil the market, it gets all crazy and gets off track in essence. So you saw a stock market initially soar and then give up those gains. The metals broke out to the upside. Silver's gone up basically $1 an ounce in 48 hours. Almost, maybe 90 cents. Pretty dramatic. The dollar has gotten the heck beat out of it on that statement because he's saying either what is his policy, what he thinks, who knows, but that's that. Now I have another issue coming up at you. You got President Trump, who we all know his method of speech brings up all different kinds of things. He arrives, he'll speak to heads of state tomorrow, and then his keynote speech is on Friday. I cannot begin to tell you how this is all going to play out. What I can tell you is that the weekly area chart of closes in the S&P are up almost another percentage point at 26 points. And that brings me to something I want to mention as we bring up these charts. I'm walking out of the building yesterday. If you've ever been fortunate enough to be in the Chicago Board of Trade, it's one of the most beautiful Art Deco buildings you've ever seen. We have a restaurant downstairs that's been here as long as I can recall. I know the original owners and so on for generations. So one of the owners comes out as I'm walking out to go home yesterday, and he says, Ira, look at these indices, and these people own CME stock and everything over the years. And I go, you know what's wrong with everybody? You're looking at points, and you're not understanding that when you're at a market that's 2,800, now remember what I'm saying, and you get a 1% correction, what's that in percentage points? I really took them to the Dow because that's what everybody understands easier. The Dow's 26,000. A 1% drop or rise, 260 points at 26,000. This one, if you take 10%, it's 280, and you take it the other way, it's about 28 points, okay? It's nothing anymore. But we're so used to 20 points being a big move, and it's $1,000 out of your pocket. that if you win or into your pocket, it's 1,000 if you win, 1,000 if you lose. It depends. And that's what's happened to traders. They're so used to looking at point scales and seeing that, not understanding that it's not a big move on a relative basis. So we've had a big move up. We had an outside day up again today. Will you take that out and set the market up for the potential that it tries to make a move down to the closest moving average? It could happen at any time. I've given up predicting because that's not what I do in these tapes anyways. I do that for my paid subscribers, and there I haven't given up a darn thing. We had a pretty good day today, but they're not all real good. I got to balance that. But you take a look at these markets, you're up. Where's the resistance? The upper Bollinger Band. Now, you have to admit, you got pretty darn close to it. You hit 28.55. You missed it by 10 points. It's really a lot, though. And you haven't been able to hit it, really, other than back here. So you've spent a week not hitting it. Do you hit a Bollinger Band regularly like this? No. Is this an unusual move? It's been that way for years, yes. And if you're trying to pick tops, you've been laid away, okay? So if you're going to lose money, you want to lose with the bigger trend at this point, which is still to the upside. Momentum is still embedded in. In other words, it's locked in. Get the red line under 80, and the odds favor you make a run for the 18-day average. Does it have to happen? No. It often happens. In the NASDAQ, you had an outside day down. So suddenly, market's breaking away from the others. It hasn't lost its embedded reading. It could correct here. And if it does, one of the potential targets could be the 18-day average. Now, understand how far away that is. You're 69.28. To get there, you've almost got to break 75, 180 points. That's a pretty big drop. When we look at the Dow, this market had an outside day up, and I always look at the low of an outside day up because if it's taken out normally, I'm looking for the 18-day average of closes. Admittedly, you're only down 0.15% tonight, 40 lower. I remember when 40 points was important. In the Russell, like the NASDAQ, outside day down. This one clearly failed at the upper Bollinger Band. Is it embedded? Well, tonight doesn't matter because we don't know what tonight's numbers are. But here remember, we've got to get through tomorrow. Both numbers are over 80, both over 80, and the day before they weren't. So it needs today in order to lock in that trend. It can flip-flop back and forth, but we'll see if it can do that. In the VIX, this is a telling sign as to what is going on to a certain degree. You had your days over the upper Bollinger Band, and you pulled back. In the past, when you've done this, let's take it here. You've gone to that 18-day average. You've gone to the 18-day average. You did it, you went back. Suddenly, we're not quite there. Now, these few days don't prove that or anything else, but I do find it interesting. I find it interesting that we just had a bullish crossover where the 18-day average got over the 100, and we've got a pattern of higher lows and higher highs. What I said yesterday, I'm sticking with. I think the market is trying to ratchet up and get away from this as your break lows to setting, if you will, the market with maybe some higher highs and some higher break low areas. Maybe the volatility is coming back a bit. On the interest rate sector, you still got the TLT in a downtrend, lower highs, lower lows, market headed down there. In the bonds, lower highs. Now, if we take a look at this low right here, 148.12, you made a lower low too. And you're trying to embed the reading. If we take a look at 10-year notes, it was an interesting day, because when the stock market was breaking, you started getting bids into the 10-year notes today. Again, tomorrow's a dangerous day. You've got the European Central Bank. You've got the Davos meeting with President Trump there. I don't know why I said Bush. President Trump there. And then you've got the keynote speech on Friday. All very interesting. Lower highs, lower lows. Still a downtrend, but you got to be careful of the unknowns. Dollar index fell apart. 89 19 is the lower Bollinger Band. You did close back under it today. You've had the embedded reading. You had a flip-flop, as you can see, to the uptrend in the euro. You got the higher highs, higher lows, embedded reading. What does Mr. Draghi say tomorrow, and how does it impact the market? British pound, been up and away. All the meetings that are going on in Davos with heads of state of Europe, the things I'm reading, I'm not there obviously, is that I think the finance community in the Brits are going to be better off on a deal than originally thought. Not as quite a bad a deal, and the market seems to be building that in. It's not my interpretation. I'm reading the interpretations, Financial Times, Bloomberg, Reuters. I mean, I read everything, CNBC. I'm liking what I'm seeing. Japanese yen. So do you believe Mr. Kuroda yesterday, who said that, no, Japan's going to keep a very loose monetary policy to 2020 and they won't hit their inflation goals, okay? The market doesn't believe a word he said. If you take a look, the market was, when he was saying it, 90.36. We're up to 91. Tonight we're down at 91.74. So for the time being, saying one thing and the market buying into it, not the same. Bitcoin, look at how it's reached up tonight for a good move. We'll see if it can continue anything. We're already into Thursday trade, and you're up $275. Now, in the energies, I told you that I'm not as convinced that the play is the outright energy prices is what I've been noticing, the differential between Brent and WTI. You've now gone from 646 to 492, so that thrust is down. However, energy prices on their own are bullish as can be. We're starting to hear OPEC, a lot of talk. I think there's concern that we're getting maybe too high. We're at 70.53. The Aramco IPO should be set, coming out. Where do you think you're going to go? If you go too high, you slow down world economies again. So I think we're starting to see, and I'm seeing it because of the news wires, that there is concern. They don't want this to get out of hand, and we're getting to that point where maybe you've got to get more oil onto the market in different ways. By the way, at these prices that we're getting in WTI, I read an interesting report that it's actually more profitable to drill offshore wells than shale. It's switching on you because the new technology of the offshore, number one, those wells last a very long period of time. They just produce. Number two, look at the pricing. And number three, you can get them into the ground and done in relatively short periods of time today. One of the reasons the president is all for that. You're up to resistance areas in the crude. You are trying to embed up here a powerhouse. I admit I thought 65 was going to be an area the market would not see easily. It's gone right through me like I didn't exist. But, of course, the bias has been up all this time. Same in gasoline prices. I don't know if you noticed that one of the things you have to worry about now with the EIA and the API numbers is, yes, we're drawing crude, and Cushing, Oklahoma, in the past 2 years has seen, we've gone from where they were full in storage, about a 40-45% decline in overall storage. The problem is we're building stocks in gasoline and distillates, and we're switching the crude for product stocks. That is something that, at the end of the day, you will be looking at and you'll hear more about. Natural gas, still in very much a bull trend. It's a Chinese market now. Why do I say that? Because so much of the coal use has gone away in China, and they're doing their very best for pollution reasons to switch over to nat gas. And guess who's the big nat gas boy? America. So that's where we're at on all that. Interesting, beyond interesting. Volatile, beyond volatile. Remember, our futures trading kit contains our trader's guides, our brochures, and it's a download. It's really not a DVD, but how do I make you visualize that? You get it by calling us. Go to our website. You'll see it right on the carousel of free offers. You can click up here at any time, and you'll be able to get all of our other free offers, because when you click on any of them, the form comes up. You can choose My Research, other parts that we have. With that, I'm Ira Epstein. I've got to get a good night's sleep because I want to hear Mr. Draghi and the policy and what goes on. I'll see you all in the morning.